Welcome to Business Beyond Borders, the go-to podcast for CPA firms seeking transformative insights. I'm your host, Laurence Whittam, and with each episode we'll uncover key insights, best practices, and invaluable resources tailored for CPAs. From trending strategies to diving deep into outsourcing and offshoring, our experts will help in all areas of your business. Hey everyone, and welcome back to Business Beyond Borders. So I'm here today with Sara Sharp, who I met a few weeks ago now. And again, very interesting profile. She's in the M&A world, and I'll let her describe herself a little bit more in a second. But we're going to discuss being a lawyer. She knows and has the conversations quite often with firms about this 7216 disclosure, right? One of the top concerns I get with a lot of firms when they're looking into outsourcing is, what disclosure do I need? I know I need to do some disclosure. So what is that disclosure I need to do? What is it for? What would help protect me and my firm when doing it? And I think it's one of those things where it's just not really educated enough on it, right? The actual law hasn't been updated for years. So there's a lot of firms that have really just followed the guidance of the AICPA. But there aren't many lawyers even that are digging into it because they're not specific experts in that area or anything like that. And it hasn't been a hot topic for them. And so they've really just used guidance from other firms, right? Which is, again, I think good to some concept, but also it's better to be safe than sorry at the end of the day when it comes to this disclosure piece. As I think it's too thought about as a negative internally in the firm. And when they actually put the legal language in there, it protects them, but also it's actually not as difficult to portray to their clients and stuff. So, Sara, without further ado, thank you for joining, and thank you for being an expert. And we'll say up front, no legal advice on here is the concept, but we appreciate you sharing your knowledge around this area.
Oh, thanks for having me. I'm glad to be here, Laurence. So my name's Sara Sharp. I am an attorney, and I specialize really narrowly in helping accountants buy and sell, or people buy and sell accounting firms. As you guys know, a lot of people who are not accountants are interested now in this space. So that's really fun, because if you do a lot of the same type of deal in the industry, you start to develop a lot more industry expertise, which I think adds a lot of value to especially those non-accountant folks who are looking at deals. And sometimes they're they're new to the scene. They'll say, I was looking at a storage unit and a laundromat and an HVAC company, but now I'm looking at an accounting firm. So you really have to assume, a zero understanding of just regulations that apply. And 7216 as a lawyer, I run across things like this more often probably than the regular person, but it's a law that you see and you think, how have I never heard of this? Because it has criminal penalties associated with it. But it took me, I didn't hear about it at all for years of doing these deals. And then all of a sudden, outsourcing and things became, I got more, educated on this space. But there's very few secondary sources. If you Google it, you're not going to get a ton of blogs explaining how to comply with this, or what compliance looks like. And then one of maybe the only secondary sources, or the best one that comes up, is what you referenced, the AICPA kind of guidance on it. So I have had a lot of clients who are not CPAs, they're EAs, or they're running an accounting firm in a different capacity, and they think it doesn't apply to them. 7216 doesn't, because they primarily see it written about in the AICPA. So, that's the first thing to debunk, is it applies to anyone preparing taxes. So, that's much broader than just a CPA specific thing. If you're, getting information from clients in order to prepare taxes, you have to comply with 7216. I don't know, and I would love to hear if anybody has ever been dinged and these criminal penalties have ever been, actually used, because that would be terrifying. I don't see a lot of compliance in the small firms with this. So that's why.
Because I believe, and when you mention that, right, I believe it's for every case, right, as it states in the 7216, I think it's for every case. So obviously, if you've got 100 clients that you're outsourcing, right? That's 100 cases of it, right? And I can't remember do you know the exact dollar figure? I can't remember the exact dollar figure myself.
Oh yeah, the fine. Of course, it says, oh gosh, let's pull it up. With a penalty of up to 1 year imprisonment or a fine of not more than $1,000 or both, together with the costs of prosecution. So, I mean, it's interesting to me that they went so hard on the penalty part, but then didn't really do much, it doesn't seem like, on educational components. Yeah. So let's all figure it out ourselves. And it's a 2008. It existed prior to 2008, but then they revised it in 2008, which kind of pre-exists a lot of the things we all know about the GDPR and data privacy laws that came out. So when I first read it, I was thinking of it more like a regular data privacy law that I'm now familiar with, and it's not. It's written in its own weird way, and it kind of zigs where the other stuff typically zags. So you really have to get comfortable with it, and I think the best thing is just to know it exists. I mean, I don't know about you, but a ton of the deals that I do involve sellers who don't even have engagement letters with their clients. Yeah. So you can be darn sure that they're not complying with the written consent requirements that you have to get a signature on related to 7216 if they don't even have an engagement letter.
Yeah, I mean, and again, it varies on firms, but I even see some larger firms that have a very limited engagement letter, right? And very, like a 1-pager or a 2-pager that really has very limited, securities in place for them, right? When it comes to engaging with that client, especially in the 1040 arena, right? When it comes to business clients, I feel like they're a bit more detailed. They've got their engagement letters a bit more fine-tuned in a lot of cases, but when it comes to individuals, they've been very flexible in that if you send your details, we're going to assume that you're going to work with us, right? If you send all your source documents and stuff. So it's and that's where I think it came out in 2002, the initial one, and then 2008 was the revision, as you said.
Right.
And I believe how it came about was more around that firms were physically sending boxes of documents overseas, right? When we were back in the paper days in that sense. Right. And there was limited controls as to how this was working, right? And you were working on a different network entirely, whereas everything's progressed in such a way where people are just accessing the same way as you would an employee domestically here in the office, right? In a lot of cases, they're in a different office overseas, offshore, wherever the case, however they are accessing. And I believe that different requirements, whether it's an international or a domestic non-employee as well. I think from my understanding of reading it a lot of times, it's that there is you have to disclose if you're even using a contractor for preparing as well, and somebody that's not an employee, right?
Yeah. And it's not just a matter of, hey, 7216 says you need to obtain consent from your clients if you're going to use their information with a contractor or overseas. That would be relatively easy. You could put that in your own engagement letter and say, by proceeding, you agree that we can use your information with contractors and overseas employees. Be like, boom, I complied. That is not what 7216 is. No. It is detailed. It wants a separate written disclosure that's on its own page. It wants a signature on that page. It wants certain words used in a certain order. And it's not something that you can really very casually blend in. And it has to be term limited. It can't be just infinite. So, and it has to be sufficiently detailed about who those contractors and what that overseas arrangement looks like. So a lot of people, it seems, when I, kind of explain this to them, think that cannot possibly be true because I've seen some of the big fours engagement letters and they don't do that. I've never seen anyone do it. I've never heard anyone do it. And, that's possibly a failure of just general education and notification of this compliance requirement. But I think also with the big four, what you don't realize is they're usually employing folks overseas. So, there might be a reason that the stuff you're seeing isn't isn't applying because they have an overseas office and it's never leaving the umbrella of their entity, and they fully control the, data privacy, cybersecurity of that office. So they'll find, ways where maybe it doesn't apply, and that's why you haven't necessarily seen it.
Yeah, exactly. I mean, I would agree with that exactly. Like, again, at the end of the day, a lot of the larger firms have created incorporations, right, themselves. But what you'll find is the majority of firms, they're not, right? They're not at the stage where they should be investing in that level of offshore operations as well, because they don't have the volume that they really need to create an office offshore and for it to make sense, right? So a lot of them use these outsourcing firms in different capacities, whether it's more of an employer of record or a traditional outsourcing firm. So I think but it does need to be stated that you need to do this, right? At the end of the day, you need to have this disclosure in place, right? And it is very specific, right? As to those paragraphs, it's not one paragraph, it's multiple paragraphs that have to be in a specific order, that have to be on a separate page, that have to be signed. But it's also not, as long as you do it, right, it shouldn't be a problem for you, right, in that sense as well. In terms of, I've seen in a lot of cases where firms have been more worried about implementing that, right, and really held back on who they send that to, and then and be educated on like why it's even there. It sort of scares people at first. So like partners have got on calls in with clients and been like, you don't want to sign this, right? Because then it's definitely going to go. It's not the case, right? It may not go offshore, right? Really, the work is being done in-house in the same network as anybody else, right? But it does need to be signed, right?
Yeah.
And go on.
Well, it comes up a lot in deals, right? So I think it kind of contributes to the reason that it's best practices for a practice or a firm to get annual engagement letters signed. I always, when I give advice to my clients, because I'm a lawyer, I like to give them a reason. Maybe it's because I also don't really like rules myself. So if the rule comes with a reason, I'm much more likely to follow it. But I say, what's your audience for this, right? So for the consent, your audience is, God forbid, there's some kind of data, issue, and then you want, all of a sudden there's a bunch of agencies looking with a microscope at what you're doing in your data practices, and they're going to be asking about this. That's true. So agencies, but there's a different potential future audience, which is somebody acquiring you. And that's where I live more, is that, let's say you want to sell to private equity or a financial or a strategic buyer. They're going to want to know that you've complied with everything. 7216 is part of that, but they're going to want to see engagement letters. They're going to want to know that you've done all of the kind of buttoned up good business practices that they expect and make them feel relieved when they offer you tons and tons of money. So I would say, there's the stick, which is apparently jail time and enormous penalties. There's also the carrot of, button it up, make it look like you're, really complying with everything, and, give that future acquirer a feeling of relief that you're on top of stuff.
Now, have you seen, as you are on the legal side for the M&A element, and you've seen these transactions going on, have you seen that outsourcing element in firms where it's actually putting a multiple or increasing the multiple that firms are getting when of their practice value and stuff like that? Have you seen that yet? Or?
Yes, very much so. So people will buy a practice with relatively thin margins of profit, and then they will turn certain levers, is kind of some of the verbiage that is used. So that will usually mean increasing rates from the client, because there's often just, you're running your business and you don't really pay attention to what's market, and years pass. So they'll increase rates. So they're increasing that, and then they'll reduce costs. It's not rocket science, but one of the ways that you can reduce costs is by offshoring, or, choosing overseas labor. And there's so much really, really capable, qualified labor that helps kind of solve for the burden that everyone's worried about, of the lack of folks coming up wanting to be an accountant. So I think that, we're all worried that not enough people are pursuing accounting degrees and pursuing that CPA designation. It's very clear. And the reason, that people aren't is partially because the work-life balance is pretty terrible for a lot of folks. And so, outsourcing solves for that. So should make it more encouraging for more people to be involved. And it also solves for the lack of, qualified labor coming up.
I'm bringing it back a little bit to the 7216. Like when it comes to specific details around what type of work, from my understanding, it's really directed to the individual tax returns, right? So the 1040s in a lot of cases, right? It is somewhat tax related, right? So I believe there is some insight into more business tax as well, right? There is certain recommended paragraphs that should be involved, but much less specific, much more of we could be using a third party to look at stuff, or contractors or another vendor to look at certain things in the best interest of the client, right? Having those sort of elements, but it's really directed and focused on 1040 individual tax returns, right?
1040s and socials. So to the extent that you've got, and if you look at your business filings, you might see a surprising amount of socials once you dig in. So I think that starts to muddy the waters where you can't necessarily say, obviously a lot of folks will use their social in lieu of an EIN. And so there's that. But then you also have K1s that, just go straight to a series of social security numbers. And that can trigger certain parts of 7216 as well.
And you touched on my next point, which was around that Social Security in terms of realistically, if you are looking at audit, if you are looking at accounting, bookkeeping, there's also good likelihood there will be socials involved in that and type of data as well. So, I like to, again, even though there's no specific regulations around the accounting and the audit and those types of areas, I always generally go into the clients and say, in your engagement letter, I don't care what service you're expecting to do. For the tax, focus on this area, right? It has to be done no matter what, right? But for accounting and audit as well, I recommend, and again, I'm not a lawyer by any means, but I just recommend put something in there just to be okay, just in case they come up with down the line, the Social Security number disclosure is going into, have you had those conversations when it comes to accounting and auditing, and what has been that sort of thought process that you've gone through?
Well, typically, it depends on the systems of your company. You're not going to have systems that are so dialed in that you don't have the risk of a client who's under a certain engagement letter extending into saying, hey, can you do my 1040s too? And so, if you're going to get engagement letters for every single project that you're involved with, and you can put a 7216 on a case-by-case basis, and whoever's making that call is sufficiently spun up on it, then I guess you could tailor it narrowly, but there's no criminal penalties for getting consent for purposes that weren't required. So, it's hard not to, of course, that's a lawyer, that's an accountant, we're more risk averse. So more consent is better. But also as of 2008, this came out, and probably people thought that'll never fly with my clients. And I'm sure some of my more traditional, accountants think this would freak everyone out. There's no way they would live with this. But the reality is in 2024, 2025, whenever you're watching this, there's everyone agrees to the terms and conditions. Everyone agrees to cookies in their website browsing, right? We're conditioned to know that you need to ask us before you do almost anything with our information. So I think it's going to startle people a lot less than it ever has before.
And then you mentioned about the term side of it, right? In terms of it shouldn't be open-ended, right? In terms of this gives me to never have to ask for it again. From my understanding, there is no specifics in there as to it can't be more than 3 years. It can't be more than 5 years, right? So again, it's somewhat not tied down, right? In a lot of places. So would you, non-legal advice, obviously, but would you say that it's better to somewhat put 10-year term, 5-year term? What would you say typically in those types of situations where it doesn't specify, it just specifies you can't have a limit?
Yeah, well, that's one example of one of the terms that you think, how is this going to be interpreted? And I have not seen any interpretive guidance on this regulation. So if it exists, please somebody send it to me.
Yeah.
I'm not saying it doesn't exist. I just haven't seen it and I haven't found it when I've looked. And so, there's like jail time and giant fines if you don't do this. There's requirements that are kind of a little bit not always exactly clear. And I'm not certain what happens if you submit a consent, but it's found to not be sufficient. I would so much rather be making that argument than having no 7216 consent. Yeah. So, I think having a term, if 100 years would probably be a little bit laughable. But, if you have a term of, it just has to be time limited. So let's say it's 5 years and then you have to follow up. I don't know of any reason that, you as the person trying to comply with a regulation would know that that wasn't okay.
Yeah. So. No, that's perfect. And again, today I really appreciate you jumping on, Sarah, to sort of explain this a little bit, because again, it's one of those areas that I've tried to wrap my head around as much as possible from a non-lawyer side of things for over the past 10 years being involved in it. And again, it's a big concern for firms, and even though we've discussed some of those, again, it's negatives. It is something that has to be done to some extent. It shouldn't be scary doing it, right? This is just a legal piece that you need to put in place, right? You need to have an engagement letter. It protects you at the end of the day, right? So make sure you're doing it the right way. So we really appreciate you jumping on to share that. Where can people find you if they want to just maybe go into a bit more detail or even look at any other side of things? What's the best way?
Well, I'm Sara Sharp, so you can find me on LinkedIn. My law firm is called SK&S Law Group. And you can also check out my online courses on how to buy an accounting practice, very niche, at dealacademy.org. And you can contact me through any of those sites as well.
Awesome. And we'll post all that. And again, really appreciate Sarah. Thank you for coming on and sharing.
Thanks for having me.
And again, thank you, everyone. Welcome back to Business Beyond Borders, and we'll see you again in the next episode.
Take care, Laurence.
Thank you for tuning in to Business Beyond Borders. I'm Laurence Whittam, and it's been a pleasure bringing you impactful insights tailored for the modern CPA firm. Remember, the world of accounting is vast and ever-evolving, and we're here to navigate it together. For more resources and episodes, don't forget to subscribe and reach out to our experts. Until next time, keep pushing the boundaries of your business and explore the limitless possibilities beyond borders.